Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
So we are going to do an update to the Las Vegas real estate market this June of 2022. As you can see on the slide here, I'll put the first one up, the date there, and this is live data, like this is real-time market data. The first one we always do is this market action index. If you haven't seen this before, everything on the right is seller's market, everything on the left is buyer's market. It looks goofy the way they did this, but actually a 30 is a normal market. So a 50 where straight up and down is still a seller's market. I don't know why whoever indexed this thing did that. They should have made 50. But I think it's because we tend to be a seller's market more than a buyer's market, and they wanted a better range of values to express. That's the only thing I can think of. But basically, even if it were 40 you would say, oh, that's left, the needle's pointing left. But it really doesn't work that way, right? It's still a seller's market if it's a 40.
Right, so we can just ignore the needle and just kind of look at the numbers because that's a better kind of perspective of it. And you can see that the real estate market is still a seller's market here in Las Vegas. It has cooled off a little bit, as it does every year about this time. So this is not something to necessarily be concerned about. It's just evidence that the market is behaving the way it normally does this time of year.
Yeah, remember, it starts climbing in like November, December, January, February, March, April, May. And like March, April, May are the huge months. So anything in June is going to be worse. Like every year ever, June is probably worse than March. Right. So that's every year people go, oh my God, look at the market's turning, it's crashing, yeah. Okay, so now what we're going to do is we're going to look at how this market action index has performed over the last 3 years. Okay, if you go all the way to the left, you see 40. We had a slight seller's market in Vegas. It was pretty stable. That's actually kind of a normal market. And then you can see what happened is this thing went up and down and up and down. And that's the cyclical annual thing that it does. But you can see that it has been 2021 and 2020. It's still a much hotter market. Now what's interesting is the dash line. The dash line is the 7-day average. It's a leading indicator. So it does show the market cooling substantially, but did the same thing last year. If you go look at last year, you see as you got in the summer, it started cooling. So what was interesting though is we had somebody come on and say, oh, well, I'm in San Diego, and in San Diego, it's really bad here. Like there's tons of homes on the market and then stuff is all of a sudden stopped selling. And I called an agent in San Diego, a friend, and said, hey, what's going on there? He goes, it's hot as ever. And then I went and pulled the market action index for San Diego. It was 91. So this sometimes anecdotal information is good, sometimes it's not, because the broad data said maybe they put their house on the market for $1 million when all the houses in their neighborhood are selling for $700,000. It's not selling and they're upset. But when you look at aggregate data, that's more telling than anecdotal data. Okay, here's an interesting one: median list price. Now, this is sort of forward-looking because when you see this dropping, that's bad, because dropping usually means that either the type of homes going on the market are different, or it means that prices are dropping. What's interesting about this is that everywhere you see that dash line above the straight line is future looking, because if the 7-day average is higher than the 30-day average, then it's dropping. But if you look at the last really year, even today, it's still above it. That 7-day, like it's still, people are still listing above what they did 30 days ago.
Right, and a lot of that is we are still in this market where sellers think, well, my neighbor got this much and I can get this much plus whatever other amount. And to some extent that is still true because we're still seeing multiple offers. We're still seeing a lot of properties selling over list price. That's not unusual. It's still a majority of the properties that I've had contact with have been going through that. So this is still happening, but I think as we keep going into the year, I think we're going to see a little bit less of that, a little bit more cooling off because it's seasonal, and that's normal for the real estate market.
And some of this too is real estate agents pumping sellers to get a listing. Oh, hey, well, your neighbor just got 525, so we're going to put it in at 540, and then or 550, and then maybe after a while after a week they freak out, because we've had people that have freaked out when their house didn't get an offer within a week, and it's like, oh my gosh. Okay, I mean that's the market right now. But so the thing is that and then they reduce the price. 2 weeks later, and everyone, oh my God, prices are falling. No. When you list way over list, like over market value, and then have to reduce it, that's not a negative signal. That's not the market's falling. Because what we're seeing is prices are still appreciating.
Right.
So the fact that list prices have come down a little, and that's the big one that I've seen, the big stat that everyone's now pumping. Oh, look at the list prices have all of a sudden started the price declines are more than price increases.
Right. Which, price declines are a combination of a property not selling because there's something not right with the property and because the property is overpriced. Even in a market as hot as this, there are properties that are just overpriced by so much that buyers are rejecting that price and saying, no, thank you.
Okay, the next one, median days on the market. This is extremely telling. This is how fast homes are selling, median on average. And as you can see there, we're down to like 20 days. And you can see over the last 3 years, this is just cyclically, like year over year, right? They tend to be higher in the winter, more days on the market, and lower in the summer, right? Or in the fall, in the spring. So you can see this is basically where it was last year. Even in 2020 October, in that time of year, it was still more days on the market. Right. Because some of that, though, we're absorbing inventory that's all absorbed now.
Right. So inventory, for Las Vegas at least, is still historically really low. We do have a lot of properties that are selling very quickly. They're selling for multiple offers. They're selling above list price. So it's still a hot seller's market in Las Vegas.
Speaking of inventory,
yes.
The last slide we have is inventory. We told you inventory, I think, is the canary in the coal mine. It is the most important one. Before I show you the chart, I want to remind you that in 2006 in Las Vegas, we had 26,000 houses for sale in the MLS. 26,000. 3 years prior to that, in 2003, which was a pretty healthy normal market, right before the run-up happened, an average was 7,500. 7,500 was an average, and that was when the town was much smaller. It's probably grown by a couple 100,000 people. So now a healthy market would probably be 9,000 houses on the market. Okay, so here's the inventory slide, and you can see the trend over the last 3 years has been very low inventory. It's extremely low. We're talking a couple thousand, under 2,000 right now. What's interesting though is if you look at the 7-day trend line, it is increasing. Inventory is increasing at a faster rate than it was 30 days ago, but some of that too is just seasonal.
Right.
But it could, this could be a bump where it increases more and it could go back to where it was in 2020. But remember, 2020 prices went up still.
Right.
So even if inventory goes up like 5,000 homes, which is way more than double what it is, 5,000 homes on the market would still mean price appreciation in Vegas.
So just keep in mind, part of this inventory increase is seasonal because it's just at that time of year where people end of the school year and people are putting their houses on the market. The other part is, of course, we have lots of people who are getting advice from all kinds of experts, whether they be experts in the media or experts in their lives, such as real estate agents or wealth managers or whomever, that they should really seriously consider selling their properties now before the market crashes. So that's part of what's spurring some of this inventory. To a large extent, I don't think that most people are going to do that because we all need to live somewhere. So people who don't have investment properties are unlikely to go ahead and sell their primary residence because where are they going to live, right? So if you're not moving out of the area, you're probably going to hang on to your house. You're probably not going to become a tenant. If you have investment properties, same kind of thing. That's fine. You can go ahead and sell the property, but then what are you going to do with the money? Especially with inflation rearing its ugly head. Real estate is a good hedge against inflation, so I don't see a whole lot of people going ahead and selling their properties. And as far as exchanging one property for another, again, if prices are inflated, then you're selling yours at inflated value and you're buying the next one at inflated value, so that tends to be a wash unless you're changing markets, and then that may make sense.
In Las Vegas specifically, there has never been no one has ever been able to successfully time the market. I went to a seminar back when we were doing REO. It was very interesting, but it was a guy who was it in some small investment firm like Family Office, and they had bought 50 rental houses in Summerlin in like 2002. They literally went into Summerlin and just in Summerlin, which is a pretty nice part of Vegas, this master planned, they were buying these like 1,600 square foot 3-bedroom houses for like $140,000 or something. And then in 2005, they were all over 300. And they made the decision to sell every one of them, right? They sold all of them. And then, of course, the prices tanked. And then those things went down to like 2 something. Summerlin didn't get hit as bad as other areas. But it's funny because he even admitted at the thing, he just said, they didn't really think the market was going to crash, but they just decided that they made so much in a short period of time, they would just take their profit and run. Like they just said, he said, we look like geniuses, but at the time we didn't say the market's going to crash, let's sell the houses. They just said, hey, look, we've got all these houses and they've really made more than we ever thought they would make. Let's just grab the profit while we can and move on. And he, sort of acknowledging that you can't really time the market in Vegas or anywhere else. But, Las Vegas, we're in Las Vegas. We really understand this market. It's a really big market. We have a very low number of foreclosures, and we have very high demand, and we do not have the speculation we had back in 2005.
Right. Yeah, it's a different market than it was then. A lot of different components. So tell us what's going on in your market. We want to know. So leave us comments. Tell us what's happening. Tell us what we should be looking for. What do you think are the telltale signs of a real estate market that is overbought and due for a hurtful price correction, we'll put it that way. Yeah. So tell us what you think. We're interested in your thoughts, so please leave us comments. Hit the notification bell, subscribe, share the video, like the video, and we'll see you on the next video. Bye.
Bye.